All right, let's try and find out what exactly is going on, unpack the numbers in more detail, try and get a bit of a forecast for the week ahead. Joseph BUSHA from JM BUSHA Investment Group making time for us this morning as well. Joseph, good to have you back on ENCA. Let's talk JSE for a second as well. And if we get a sense of the JSE ending more than 1% in the red yesterday, what led to that damage?
The volatility really just unprecedented. I think we have seen over the last, I could say possibly even this year. I think it's just basically the jittery. You mentioned in your intro that the US is too stuck in terms of the debt ceiling, the negotiations there, where I think the Republicans are busy discussing with the Democrats. We see the continued now war between Russia and Ukraine taking now the war to Russian territory, in particular Crimea. We also, have the electricity shortages here that basically have escalated again to stage 3 and getting long periods of blackouts. So those are bringing lots of uncertainty to investors, including, as you mentioned, the Brent crude oil that is ticking above 90. And we see the weakening in terms of the gold price, which is supposed to be a safe haven, but certainly is ticking below $1,900 per ounce. So I think those are some of the issues really that are causing investors to be jittery.
Yeah, at the moment it's a lot to do with what is happening transatlantic, which is affecting us here at home. How much of an impact do you think this jump in the oil price is going to have for us motorists come first week of October? Because we were below 93 yesterday. I see we've jumped up nearly 1% since yesterday. So how do you think it's going to affect the fuel price? Want to take a guess?
If the rand remains weak above 19 rands to the dollar, and then the Brent crude oil remains elevated, possibly moving to 95 dollars per barrel. Certainly, I think we might see a little bit of jitter again, within our market, in the sense that if we get another for increase retail at the pump, we had, I think, about around 73. The expectation might be again above that. It means our inflation are going to remain elevated. You saw the central bank keeping rates unchanged, but inflation ticked up to 4.8 from 4.7. That means interest rates might remain higher for a longer period, and that will certainly cause lots of pain to consumers, reduce credit spending, and hence I think just put a little bit of more strain on our economy.
Yeah, and we know as well, the moment we start seeing the diesel price jumping up again, it's the industrial fuel, if you want, then what tends to happen, that knock-on effect with the cost of groceries in our country as well. All right, let's move away from markets for a second. We've spoken gold, oil, and what's happening with the currencies. Some company news. So Discovery is now moving into the home loan space. I would have thought with interest rates the way they're going, the cost of living, people might not be that interested in taking out more home loans. And I wouldn't have thought another company would come in and start offering home loans. It's an interesting move.
It is interesting, and I think Discovery really is trying to take the battle to some of the more established big banks or financial service companies. So it's becoming a full fledged financial services business. They started on their health, then they expanded their offering, and we saw in the last few 3 years, they entered into the banking sector. They have a partnership with FNB in terms of their credit cards, but I think they're going to partner with Checkers in terms of offering their home loans, which we have seen really just the partnership between the retailers, which have got the mass market, and some of the financial service businesses. I think it's interesting for investors. Sometimes it's always good, when businesses come, when things are on the top, but certainly they come in with a little bit of enhancement, a little bit of innovation. I think you see that they're going to possibly reduce the rates for some of their clients to be able to attract them. And they're hoping that when they come, when the market is really tough, they will be able to capture most of their clients with a little bit of add-ons or reductions in the rates for some of their customers. So I think it's exciting because if you look at it, whether you're a mobile operator, a big retailer like your ShopRite, most of them now are converting into financial services as well. So I think it's going to be very, very tough for them, but I think they are seasoned, kind of business people, and they certainly see the gap in terms of innovation.
Yeah, the Discovery seen the gap as far as the home loan market is concerned. They're moving in there, and you're quite right. Discovery is very good. For those who know it, very good at bundling things together. So if you're one of those Discovery clients, you've got multiple portfolios, you've got a credit card, you've got the healthy, whatever it's called these days, Vitality, and you start earning some points and etc. within Discovery. It's actually very, very clever. Okay, can we talk other property segment for a moment, Joseph? So Vukile Property Fund. Now, this is a company that owns a lot of shopping centres. I think everyone knows Vukile very well. But I see their reports have come out showing that there's more foot traffic getting through shopping centres. I interpret that as good news. Brick and mortar shopping is picking up again.
People have moved away from COVID. Remember, we were all kind of restricted to our boundary walls, to our homes. But I think people have decided that, listen, let's go back into the shopping malls. I think you've also seen both with hotels, restaurants, and people are really flocking back. But also now we are in the season now. It's a little bit warmer, where people need to socialize, people need to spend, and moving towards our festive season. I think it's the right note. I think across the globe, people have started going back into the shops and move away, not necessarily move away from online shopping. But I think that has been seen across, whether it's in the sport fields, whether it's into the leisure areas, that people have now gone back full strong in terms of increasing traffic, feet traffic, to the shopping malls and some of the public places people had stayed away from since the COVID. So I think it's good news for all the property owners, Hypro, that own these shopping malls, so that their tenants basically can start paying a little bit more, in terms of the rentals and the occupants rate of these shopping malls.
Yeah, let's not forget the importance of employment when it comes to physical shops and shopping centres as well. So it's good to see more feet making their way through some shopping centres. Joseph, always good to join us with his time on a Wednesday morning. Joseph BUSHA from JM BUSHA Investment Group as well. So Discovery moving into home loans. We're starting to see more feet moving through shopping centres, and it's not good news for that oil price. But I'll tell you what we'll do. An hour from now, we'll check in again on that Brent crude price. That goes through 95. I'm afraid, South Africa, we're going to have a bit of a nasty knock to the fuel price come the 1st of October.